more on market reaction. Holiday today in Nigeria, but on the international markets, different story. Nigeria's international bonds, they jumped the most among emerging market peers at the open on Monday, with its longest dated dollar bonds rising to their highest since January. The notes maturing in 2051 rose nearly 3 cents on the dollar, 73.42, biggest gain since April, as at 8:05 a.m. in London. Here is what before the bond markets moved this morning, some analysts opined on how the markets react. Here is Ronak Gadia. He's the director of Sub-Saharan Bank Research at EFG Herm. Said the markets will receive the removal of Emefiele as a positive development, as his unorthodox policies have become an impediment for Nigeria. He continues saying that his removal should be viewed as positive and could lead to increased risk appetite for Nigerian bonds and equities. And we're already seeing that on the bond markets. Here's Ayodeji Dawodu as well. He said this could spell the end of unorthodox and often conflicting and confusing monetary policies that held back economic growth and destroyed local and foreign investor confidence. He's a head of Africa research at Bank Trust & Co. Patrick Atuanya, who is the publisher of MoneyCentral Media Ltd, he joins us here in Lagos for more on the reactions, the market reactions. Patrick, you're very welcome. Good morning to you.
Thank you,
Happy Democracy Day to you.
Yeah.
So, we've seen what bonds are doing. What about the NGX? What do you think the NGX could do tomorrow?
Okay, so the bond market is often seen as smart money. Like people that trade bonds are usually very smart.
Yeah.
So I believe the equities will follow the lead of the bond market, because you have a lot of sectors that have been held down by the CBN unorthodox politics, unorthodox policies, maybe even politics.
Yeah, exactly.
Right? So you have the bank, you have the banking sector, high CRR, a lot of the stocks on the banking index are trading way below book value. So even if they trade to one-time book value, that should move the needle in all of them. Your UBAs, your Access Banks, your First Bank. That's a big one. Zenith, I think only GT is trading around 0.8 times
earnings,
or 0.9 times book value.
Yeah, okay.
0.9 times book. So just getting them to trade at book value should give the banks a big jump.
Yeah.
From here. You have your industrials, right? Those that depend on foreign exchange for some of their raw materials. Those should also do well. So the market is like a spring, right? Waiting to jump. Yeah, waiting to pop. And I think the rally will start or will continue based on the news that we've heard so far.
But can it be sustained? We saw what happened when the president, after his inauguration speech, market popped 5% ahead, but it wasn't maintained. So if the NGX should jump tomorrow, do you think what would sustain that rally if we saw one?
Okay, so the President Tinubu is currently undoing a lot of the bad policies of the previous administration, right? So these are kind of like low-hanging fruits, get rid of subsidy, get rid of the CBN governor. We've not really seen his own team come on board. So the rally will sustain until, we begin to see what is the direction of his economic team.
Right.
Who are those that are going to be in charge? Are they going to be politicians or are they going to be more of technocrats? So, okay, so we have an acting central bank governor in place. We still need to fill that seat substantially with a governor that will be confirmed by the Senate. So who is that going to be? Who is going to be the Minister of Finance, Minister of Economy, Minister of Industry, Trade and Investment? So we need to see, if you can see round pegs and round holes, then it will definitely take the market to another new higher level.
You guys, at MoneyCentral, you wrote an article on the Deputy CBN Governor, I think Shunbi also, that's going to be taking over. What do you know about him that's going to be...
Okay, so from what our sources tell us, he is quite competent, right? Very dogged. Even they mentioned stubborn in the sense of, he doesn't look back what he wants to do. He's a fintech expert.
Yeah, NIBS, right?
He was
the head of NIBS.
Previous MD of NIBS, Nigerian Interbank Settlement System. Introduced a lot of reforms into the sector, the banking sector. He worked on BVN, he worked on NEFT as instant payment. very technical, sound, guy. He has delivered a lot of reforms to the financial services industry. And what's exciting about that, I don't know if he's going to be made.
That was my next question for you.
He's going to be made the substantive governor. But what's exciting about that is that it's a chance for the fintechs to actually, play a bigger role in Nigeria's economy. If you notice, there's been a little bit of shielding of the banks from, what the fintechs can do.
Yeah.
MTN has a mobile money license, but it's a little bit restrictive. It's not as broad-based as what they can do elsewhere. So if some of those technologies unleashed in the sector, imagine where MTN can go. Numbers like counters like Airtel and the rest of them. But the exciting is that there will be reforms that we will expect reforms, and we also expect that whatever probes that's going to happen is going to happen quickly, and it's not going to shirk back from making those tough calls on finding out what had gone wrong in the past couple of 5-6 years.
Yeah. What do you think happens with the exchange rate? This talk, he says he wants a unified exchange rate. Does that mean we move to the parallel market? What do you think is going to... Does it mean a devaluation, obviously?
What it means is market-determined exchange rate. So there's something called purchasing power parity, whereby it's something called the Big Mac Index, where you check, okay, what would the Big Mac cost? What a Big Mac cost in New York, what would the equivalent be in
For those that don't know, this is a hamburger we're talking about, right?
Hamburger,
so a hamburger from McDonald's,
For Nigeria, we could use the KFC index, right? So when you do the maths on that, since we don't have McDonald's in Nigeria yet, the maths on that, the currency probably should be trading around 600, 620.
That's on the official market.
That would be like the single market, right?
Okay.
So we don't think there'll be anything like official markets. We'll just be one interbank rate that will be trading at the very close to the market rate. And what the CBN can do, which they've done in the past, if you remember, is to set a band around it. They could say plus 5 or minus 5%, whereby they can come in and intervene. So if the market rate is should be trading around 620, and it begins to get to like 640, right? Begins to get a little bit low. CBN can come in and sell dollars into the market, right, and push that rate down towards where it's comfortable. Then if it begins to get, let's say you have a lot of oil money coming in, the currency begins to get a little bit expensive, so it begins to appreciate a lot. CBN can come in and just buy dollars from the market just to keep the rate around where it's comfortable. That's what a lot of central banks do. So what that means is that your Dangote refineries, your NNPCs, your exporters, those that earn dollars can just sell into the market and get the rate that is a market rate.
So easy in, easy out.
Easy in, easy out. And they don't have to take a haircut on whatever money they bring in. So that's the good thing, because right now, if you bring in $1 million, you're automatically taking a 40-50% haircut.
Patrick, we gotta go. But Happy Democracy Day.
Yeah.
Patrick Atuanya, publisher, MoneyCentral Media Ltd.